what forward-looking statements are. I'll go straight through that. So we are in Burkina Faso in Africa, which John did mention. We are located right by the main city of Ouagadougou. We're about an hour outside. You can actually leave the office in Ouaga and have breakfast at the site in about an hour and 20 minutes. So it's great in terms of location. You know, I would say we are in an emerging district. We have West African beside us who are also in the advanced stages of development. And we do have B2, which has got a very nice looking project called Tuega and Kiaka right beside us. In fact, there's about a 10 to 12 million ounce jurisdiction here within a 15-kilometre radius. So that's something that's quite important looking going forward. Very easy to get to the site on a paved highway right out to the site. We've got a 5-kilometre main access road that's actually now been upgraded as we speak for the construction. Most of our camp is built, so we're ready to have people on site. We have about 80 people on site right now. We're building 2 more of those units, which would give us access for about another 45 people. Office in Ouaga all built. So all of our sort of infrastructure is in place. There's quite a bit of money spent on this already historically. Very experienced management team. We have been in the construction and development of 13 mines over the past 30 years, 19 M&A transactions, very successful ones, 10 debt and project financing, so we know how to build it if we need to. We've raised over $2 billion in equity, and we've been involved in the operation of 10 mines all over the world, including Africa. So we do have a team here that knows how to build and operate this facility. Very modest upfront capital. We kept it that way. We really wanted to look at how could we build it. There is a very large resource here of lower grade, but that would be a significant capital cost. That's not how we looked at it. We kept it very simple. We are fully permitted. Feasibility is complete. We are going to modify that a little bit, and there's some exciting news coming out here in the next few weeks in that regard. Resettlement has been permitted and commenced. Every African project these days does have a resettlement attached to it, and this has all been permitted, and we're just starting to construct the resettlement villages in the next couple of weeks. And with the major earthworks really set to commence in Q2. We will do some in Q1, which is sort of early stage works, a few bridges and things. Not major capital, but allows us to get access to the other parts of the project. Very financeable. This is all free dig when we start this. This is a long shear. We have 13 kilometres of free dig, 60 million tonnes of it. So we don't need sophisticated equipment. Upfront capital of 145 million. We do have 50 in the kitty right now. Very short payback period because of the margin on these free dig ounces. We go right from surface. There's no pre-strip. We're right into the cash flow right away. And a very supportive financial partners. We have RCF in here. We have Van Eck. We have Sun Valley, who continue to buy on the market, and Equinox, which is Mason Hills out of New York. So very strong financial partners behind us. And I think what really shocked people when we come out here was the robustness of this project. And I really encourage you to follow what's going to happen here in the next number of weeks. This is going to become even better as we move forward. This is going to be an extremely attractive project and probably one of the better ones that I have worked on. It is shallow. So we really are focusing on these early stages of about 45 meters. But I just want to point out that there is zones in here that we are currently working on that are hard rock, but they are thick, high-grade material. Most of the sulfides are around about 1 gram. But now that we've gone into it in a deeper dive, there are 4 key zones here going forward that are significantly better grade and sit right beneath the oxides. So that will become in play here as we move forward. And this is the higher grade sulfide zone. This is one of them, and you can see one of the thicknesses, the thickness of these high grade zones. The ore body is extended 13 kilometers. You can see 2 areas here called the Knobson River and the MV2 stream. They were never permitted, and there's about 230,000 ounces of oxide sitting there right on surface. These are seasonal rivers for about 8 months of the year. They're perfectly easy to mine in, and I can tell you that they will now be included in a resource update and will be in part of the mine plan. The original mine plan was to build it at 4.5 million tonnes. With these zones, we will now build it at 5.2, which will add about $3 million to the capital, but very, very short payback. So that now becomes part of the mine plan. Very simple circuit. We visited a number of them. Lycopodium are the engineers. They actually built one of these in Laos. We do not have any upfront crushing stockpiles. We literally free dig into an apron feeder. About 80% of it runs right through the mill. It does not get ground. It's already 125 micron. The other 20% runs to the cyclones back into the mill. Why do we put the mill in and not sort the product out? Because materials handling, it's so simple to do it this way. We have 24 hours of leaching, so straight into a set of leach tanks out into the tailings. The operating cost for the plant is about $5 a ton. Very low reagent cost, very low cyanide. It leaches so fast. Very low lime. We have a low labour component because we don't have anything sophisticated here. So it's a pretty simple project. There was just an announcement where BNP Paribas financed a project very much like this. They just published their operating cost per ton of ore processed, and it's about $4.80, and they're half of our tons. So we're pretty confident in our costs here. And that's what it looks like. Lycopodium build these all day, all night. They just finished one in Burkina for Semafo. And we will leave space here for an additional tank, which gets us to the 5.2, and which you'll see in a little while, there will be an area for a sulfide expansion, which we believe will add in the region of 30 to 40,000 ounces per year, starting in year 2, which will be completely financed out of cash flow. So no extra shares for another 40,000 ounces per year for about 10 years. Tailings was originally about 53 million sustaining life of mine. That will come down to about 30, mainly because we're now using the mine waste to build the tailings. So that just gets trucked directly there. And we've changed the profile, so now the tons per vertical meter of storage is significantly less. So that's not in the economics yet, but it will be. So that's what it looks like. It says 4.5, but it will be 5.2. After tax, NPV is 224 million. I think with these sulfides, I would be shocked if we don't add another $100 million to the NPV, again, without issuing a share. And after tax IRR of 42.6. So a very, very robust project. I think, again, you'll see that the life of mine will likely go to about 14 years. It will take about 1 year to build, but why do we have 2 years? Because we want to ensure our water supply. We are putting in a water storage dam. We want to put that in up front so we can make sure that we have water. Water's critical in any African project. So we're just giving ourselves a little bit more time here to ensure that we have that water supply. The real construction, the real expenditures really start occurring in Q4 of 2019 into the end of Q4 2020. With the additional CIL tank, we go to 5.2, that's done, and it reduces rehandle. Optimization of the tailing storage, that's done, $20 million of savings, not yet in the economics. Additional drilled off M&I, we have lots of that. And particularly in the restricted zones, the ministers have now improved those permitting plans, so we can now bring it into the mine plan. And we're moving towards final permits for these zones. We expect them in the next couple of months. Exploration, great recent results on both the oxide and high-grade sulfides. We will be updating the main resource later on this year. We will do an interim update for the restricted zones and some of the high-grade sulfides. Lots of oxide and sulfide exploration, both north and south of the deposit, so still wide open. Not in any resource base right now. And the high-grade sulfides, which I think is going to be a key part of what our next step on the economics will be. And that really fills in here. So yeah, as you can see, we've got very high production in the first 3-4 years, then it starts to drop off. I would expect that you will see that there will be another 40,000 ounces plus added in these zones here. So that's something to look out for. Restricted zones, as I said, all drilled off, ready to go. Nothing new there. This is P17 South, which is one of the high-grade sulfides. Starts right on surface. The M&I grade right now is 2.6, so very high grade, very simple metallurgy, all free milling. So that will become part of an expansion for us. And this really will determine the next stage of the expansion for the project. So we expect that we will add something around a 3,000 ton a day crushing grinding facility for the sulfides, and then it just goes into the same circuit. So very little capex to do that. So great jurisdiction, lots of active people there, lots of, you've got Endeavour, you've got Semifo, you've got IAMGold, you've got B2. This is big country for the intermediates and majors. Experienced management team, we've built these things before. We've merged with people before, so we're pretty much can figure it out. We are big shareholders. The board owns a lot of stock, as does management. We're construction ready. We've got a strong backing from our big partners, including RCF. And it is a modest capital. We're not talking about $300-400 million here. We're talking 140. And so lots of enhancement opportunities. So we think that they will come into play here in the next 4 to 6 months. We're very excited about them. We really see a lot of potential here to move forward in terms of what we're doing. And very supportive shareholders. One of them is a local bank in Burkina who are a shareholder of the company. So next steps, basically do the capex savings on the tailings and the optimization. We're going to award the reset. Well, actually, we have awarded the resettlement, so that's going ahead. Restricted zones in P17 South. Look for that press release of what we're going to do in the resource update there. We started our detailed engineering with Lycopodium. We've advanced discussions on project financing. Very, very strong indications of debt from the typical banks that you would see in Africa. We've got a very strong team. We did a press release of that on this year. I think we put together a fantastic team to build and operate this. And imminent here, looking at what the high-grade sulfides does for the overall production profile, the economics, etc. So again, I think a very exciting step for the company going forward. Okay, thank you.